Welcome to the NWR Virtual Resources Series. My name is Kerry Stevenson, and today I'm bringing you EQ Resources. The ASX code for EQ is EQR, nice and easy to remember. They're transforming their flagship tungsten assets at Mt Carbine in North Queensland. They're using advanced technology, they've got historical stockpiles and also unexplored resources. And they're aiming to be the pre-eminent, I should say, tungsten producer in Australia. Joining me today is their CEO, Kevin MacNeill. Kevin, welcome to the NWR Virtual Resources Series. One day we'll see you in person, but over to you to tell us the latest news from EQ.
Thanks, Kerry. Good to see you again.
Good to see you.
Oh, apologize. So, as you said, Kerry, we're the primary tungsten producer in Australia, as modest as we are, but that we hope to expand that in the very near future to, and some of our friends in the tungsten business are also on their way to being the producers as well. So we look forward to having more supply outside of China. So at EQ, as you remember, we have a very high-grade resource that we drilled off under the open pit that I'll be talking about. We have multiple revenue streams from our quarry operation and various aggregates and road bases that we do. We have a very low-cost expansion because we're a brownfields expansion. We have a very experienced board and leadership team, which I'll just go into here shortly. As you've seen, our share price has taken a nice little rise, and after we put out our resource statement, and we changed the resource around quite a bit from a very low grade, high volume resource. We narrowed it in around the open pit and focused on as much high grade material as we can practically process and to be able to convert. So our market capitalization has been up from 20 million, 25 million to 90 million in the last year and a bit. So we hope to see that topping 200 next year.
Kevin, just before you go on, I noticed with the board and leadership team, you've got Germany, Australia, Singaporean, Canadian. Is there a strategic reason for that, or they're just the best people in the tungsten market?
Yeah, no, it's we do have a very diversified board, but and it represents both shareholders, technical, and our joint venture partner Oliver Kleinhempel with Cronimet wears two hats currently, and so it's sort of a cross section that represents our major shareholder groups.
Okay, thank you.
Okay, thanks. And I guess we kind of talked about the guys there. Richard Morrow as well as on our board, Steve Layton, and they're very well known in the stock market industry, as you would know. And yeah. So at Mt Carbine, I'll just quickly, and this is kind of an old slide, but we really like to use this, which kind of speaks to who we are and what we're doing and why you should invest. And we're a critical metal, and we get very good government support from the Critical Metals Office currently on permitting and anything that stops production. They're there to help us work through any kind of problems you may have. And also government grants are readily available, and we're working on all those fronts to participate as well into those. As we said earlier, I like to call it sneaking up on production, if you will. We've taken an approach where we kind of been getting bigger and bigger as we go, adding another piece on as we go. And while we're doing the bankable feasibility study, we're testing and de-risking, I guess is the biggest word I would like to use, is that we're de-risking the project all the way through it. And we have done some early works funding that I'll explain a little bit later. But I guess the buzzword I'd really like to use, this project has been totally de-risked. And the infrastructure, you drive literally through our site. The waste stockpile is on one side where we process and then pump across to the processing plant on the other side of the highway. The quarry byproduct, again, we've fulfilled a very large contract, the largest in its history last year, and we're working on some very large contracts this year, and we continue to fulfill intermediate contracts, if you will. And things are picking up in the industry. We've seen now before the rainy season, as most of the government jobs work, 3 months before the rainy season, everybody wants everything. So that's what we're been working on through the quarry. The resource, like I said, with the share price, had a really nice run up on the value of this resource. And this resource is what I would like to say is really a world class, that we really focused on bringing it into reality, where we got 9.2 million tons at 0.63, and the inferred or indicated resource is actually higher. We got 2.4 at 0.75. What we're looking at doing is converting. So the open pit is going to be in the vicinity of around, we feel, around 1.4 million tons. The optimization is still going on, but it'll be in that range with a very high grade. And then we need to drill the underground resource off, because we feel that we will convert most of this inferred resource into indicated resource in the future. And this is the growth story within the company and why people should invest into the company. We're going to have really good cash flows coming in here. Plus, we're going to have massive exploration upside on the underground and potential on the underground. And the tungsten fundamentals from the last time that you interviewed me, I think we're at 275. We're now at 320 in MTU, or $32,000 a ton. That we're at now. So they just keep ticking up, and it's all demand driven, with the economic recovery is driving it. So our schedule, so we've been using our quarry kit for feeding the low-grade stockpile and testing various samples from the pit, putting it through our processing plant. The last use of proceeds, we got our processing plant now to 1,000 tons a day, and it's very consistent. I'm getting over 90% availability in the processing plant. Very happy with the recoveries. So now we're turning our guns to the crushing section, and some of the early works funding is in that regard, and then the open pit will flow in later. So feasibility study, mid-November. We're anticipating sometime mid to late November, we'll have that out, and then that will be our 1 million ton per year processing plant that will sort the ore. The 1 million tons will get sorted down to around 350,000 tons that gets processed through the plant, and that plant will eat it up. We are upgrading currently to get ready for the rainy season. We're putting in some early works material, and then we will restart the open pit permit pending, sort of around mid-2022.
Kevin, when it does, because it gets very wet and rainy up there, do you just start to look at sort of the logistics and the optimization, do all the sort of the off-field work during that time, and how long does that last for?
Yeah, last year we've seen about 3 months, but no, we go right through, and we've designed the crushing circuit to have everything wet because of that reason. It's too clay rich, the stockpile. So what we do is we spray that big screen that you see off to the left. That's purchased, and will be coming up here shortly. It's a big triple deck Sandvik screen, and that will be fitted with wet spray bars, and we'll be washing the material through the crushing system. And the big blue beast that we've procured a couple of months back with the last funding, they've named it Big Kev, and yes, I'm excited. I'm excited to have it because it really pumps out about 450 ton an hour, that thing. So it's and then Mincor have designed a little pre-start plant prior to the feasibility study being done that you see down here in the right-hand corner, plus a power upgrade is currently ongoing. So this is part of the early works program that we had announced with the last convertible debenture funding that we did. And we're finding now that the XRT that we currently have, with the increase in production that we're seeing, that we require additional, there's 2 sorters were always put into the big processing plant. So we're going to accelerate this up, and this one has become available. It's a nearly new to us machine, so we're looking at we are negotiating on this machine currently to see if we can get it. This is the overall plant expansion when it's finished. So some of these pieces, like that big screen, get fitted into this overlying footprint, which is the optimal with jaw crushers and everything. But the early works program is really just focusing on scalping out the sizes, and we'll be ordering, once we get the funding in place after the feasibility study, the big cone crushers, the big jaw crushers. But we are starting this power, and implementation is on this footprint. So this is already designed down to the last nut and bolt. On the geology side, like I said, I think the real message that I want to get through here is that the feasibility study that we're doing is on the waste rock dump and the open pit only. And this makes up somewhere around 20% of the entire reserve. The big upside on this project in the future, although the open pit is very significant, but the big upside is the drilling of this underground and converting the inferred resource into indicated resource. There's a decline that's already existing that goes down into this underground, and we'll need to be extending that about another 400 or 500 meters, and we'll be drilling off of that decline out of the open pit when the water's out of the open pit, and then down the decline we'll be doing that. So that'll be really exciting. That's kind of like your year 2, 3, 4 out in the future, that all that work will be taking place while we're doing the open pit and getting ready for the next 10 years of mine life from the underground.
So the underground will happen after you start to get some, I guess, some revenue, some cash flows from the waste rock in the open pit. Is that correct? Correct.
Kerry, like the whole objective that I had here, I've seen too many juniors try to go too big too quickly. And what I decided to do is take it in bite sizes: the waste rock dump, the open pit, and then the underground. I could capitalize and we could drill this off. We have the funding now. I could drill off another 8-10 million tons. We know the underground is there, but I want to get into production. I don't want to dilute the shareholders out of existence. I just want to take a piece by piece approach on the way out. And that's what we've done. So some of the near term, we're currently doing exploration around the immediate vicinity, around the plant, to see where these zones extend to. So I know it's a little bit of a complicated map, but you see those fancy colors in red and green. That's basically the open pit, and the blue box is where we've cut off the resource model. But all these veins continue both east, west, and north on the deposit. And those red veins are what we call the Iron Duke. We determined this year that they do line up with all the Mt Carbine veins, and that we'll be drilling these off sometime in the new year, early in the new year. We'll be starting to look at drilling off some more of the resources around the open pit to extend that, and then into this underground. But there's some very exciting things. We're doing some soils, we're doing some geophysics currently around, and we're seeing some very interesting structures that are occurring that our geologists are quite excited about. So our focus has been tin, tungsten of late for exploration, and we're really just sticking to that model for the company. This is just a couple of shots of the ore in the open pit that will be taken. This is the pit shell. Those Brisbane city center towers that you see there are inferred resource that will get converted in the future for the underground. And you'll see here just on the next slide that this is sort of like a 5-year pit shell that we're just finishing the optimization on, and to see how deep we can take it. There'll be different pit shells, but again, you can see the red going down under the open pit there. That's the underground potential in the future that we'll be tackling, and then all the other to the northeast as well. So my geologists wanted to make the point that make sure that they know about the high conversion factor from inferred to indicated resource, that our initial inferred resource, we went up in grade on that, and he believes that in the future will also be going up. As you drill deeper, you hit more of these high grade patches that are in the deposit. So
just before you go on, sorry, Kevin, you mentioned dewatering the pit. Obviously, that's further down the track. Is that complicated, or is that a fairly easy process that you have to go through? And how much water is in the pit?
Yeah, we have been, Kerry. We use it for processing water in the current operation. So in the last 2 months, we've dropped it about 8 meters in the pit. So we just use it in the processing. We haven't released any water from this site in the last 10 years. We have a negative water balance on site with the evaporation rate that we have here. And we'll anticipate that water will be out of the pit by the time the open pit starts mid next year, that we'll be looking at that. So yeah, not an issue. We feel it's a resource for us right now that we have that water available to process, and we are doing boreholes as part of the feasibility study just to secure water supply for the future.
Good to know. Thanks.
Yep. So the feasibility study, like I said, we really just focused it around the waste dump and the open pit. We've been, and again, I just want to say, de-risking it by having a full-scale plant already up and operating and testing the low-grade stockpile. And I think that's been, so we're leveraging all the current infrastructure that we have, like we have offices, we have, everything is in place to run a mine currently, like we're doing. So it makes it really easy to, we have about $30 million worth of infrastructure that's already been established here over the years. So it makes it really easy to get into production. So the capital is going to be quite modest to put in that new crushing section. And then, so we'll take on that crushing section first that you saw in the slide. And then next year we'll go into the open pit and we'll raise more money at that time. So the idea is to keep the share price going north and just do it in steps as we go. So we do have quite an established ESG program here with both Indigenous engagement with employees and also with ladies. We've been finding that some of the young ladies in the area, we've been taking them on as truck drivers, plant operators, and we're now at 23% of our workforce is Indigenous or women in the, and like I said, they're not all office jobs for sure. It's quite a small site. So the ladies are rolling up their sleeves and getting in there.
We're better drivers, Kevin. We're better drivers. We look after the trucks and the cars better.
Yeah, absolutely. Yeah, and show up for work as well. Yeah, no, it's been really successful in the plants as well. I'm trying to get one of the ladies up the curve to supervisor in the plant, and she's very close. So looking forward to that. So yeah, so that's kind of where we're sitting right now. It's an update on Mt Carbine, Kerry, and we're ticking away here. We're like I said, we're expanding as we go and putting the pieces in place for the larger expansion in the future.
Kevin, thank you very much for that update on where you're at with the Mt Carbine project. I love the fact that one of the things you said earlier, and by the way, ladies and gentlemen, if you would like to ask a question, please enter it into the Q&A panel within the Zoom box just at the bottom of the screen. This is your chance to ask Kevin anything live. Kevin, I do like the de-risking of the project. I've got some questions, but Nicholas has just asked this one. The feasibility study is based mainly on the open pit. Can you expand on the high-grade tungsten vein value under the pit? Yeah, no, it's the feasibility is actually on the open pit and the 12 million ton stockpile. Most of the value really comes from the open pit portion, and that's where we're really going to be focusing. But under the value wise, we feel that we are only exploiting at this point 20% of the entire resource. Under this feasibility study is only going to be 20%, but the numbers I think are very significant for this early phase. And the whole idea, like I said, I just wanted to
use the KISS method, and we just keep it simple, and we just kind of march our way up instead of having a big blowout and then having difficulty on the way up, as we've seen on the way in different projects in tungsten. And we're just sort of what I call sneaking up on production.
Well, it's interesting. I was up around that area. I forgot where you were. I was in Cairns just last weekend. I could have come and said hello.
Yeah.
One of the things I wanted to know, Kevin, you talked about de-risking the project. What sort of capital are you looking at for the crushing area that you spoke about?
So the crushing area is about $10 million is the crushing, and we are already, like, working capital wise and everything. We're pretty much into current cash flow. We're sitting with about $6 million in the bank, and so we're in pretty good shape right now. So yeah, we don't see much. The pre-stripping, we're trying, the objective has been given to the mining guys to try to keep us cash neutral, with the cash coming off the waste dump to get into production. So the pre-stripping is very limited, and so that's the general concept, is really just trying to keep CapEx to a minimum, and but without hurting OpEx obviously into the future. So.
And without diluting those shareholders too much. Kevin, what's the tungsten market like at the moment? Is the price strengthening? Your feasibility studies, was that done on lower prices? Do you see that there's going to be a value uplift there?
Yeah, obviously, absolutely. We're sitting latest, I think, 320 on the per MTU, which is 10 kgs. And again, I think there's a real play here. It depends what happens with China. Like, China are shutting down a lot of their mines. The supply is tightening. And if anything geopolitical happens with China and Australia and the US or whatever, that supply is going to get cut off, and the price of tungsten will go through the roof. China controls 83% of the world's tungsten currently.
Wow, I did not know that. 83%.
83%, and that's getting tighter and tighter. And the guys outside of China we sell our product to Cronimet, our joint venture partner on the waste dumps, and they say that they're getting calls every day on the for the purchase of tungsten. All
right, last quick question before I'm going to have to finish up. If you were to say to investors, why now is a good time to invest in EQ Resources? Because I'm an investor, I want to know. Why now?
I mean, I think this time next year and the year after, the cash flows are going to be very, very significant. The profit coming off of this little mine with the waste dump and the open pit are going to be very significant, and will sustain a much higher share price than where we're currently sitting. Plus, we'll be into exploring. I'll be drilling the underground. I'll be putting that in, as you've seen what happened to the resource as it went to indicated resource, and we'll be developing the underground. We'll be expanding the regional footprint of EQ Resources into other exploration properties, and we're certainly looking at a growth situation here. So I'm very excited about the prospects of this. We currently see the market cap should be probably, with the feasibility numbers justifying it, with us into production, and sometime in the next 6 to 8 months should be $150–200 million justification for a market cap. So that's and then it'll only go up from there.
A nice summary of the EQ Resources project. I really appreciate you giving us an update today. Kevin MacNeill from EQ Resources, thanks for joining us at the NWR Virtual Resources Series.
Thanks, Gary.
Good to see you.